Hey guys, welcome to today's session. I'm just going to check that the streams are running successfully because I decided today to also stream this onto my personal accounts too. So I just want to make sure that it's actually working. And indeed, it looks like we are live. I use a platform called StreamYard, and if you've never used it before, it's fantastic for streaming. So yeah, I'm going to give everybody a minute to join. I've also pinged the Darwinex Discord. For those who are watching on through my personal Twitter or my personal YouTube, I also stream 3 times a week for Darwinex as well. Well, sometimes more, sometimes less, but usually on average 3 times a week. So what I've decided to do is instead of just streaming them on Darwinex, I'm going to stream them here as well because I'm sharing more things about actual trading as well as just on Darwinex now. We're taking a look at strategy development. I'm in the middle of my Q3 review, which I've decided to broadcast some of that because I think it's interesting. And I get a lot of people pretty much on a daily basis ask me about some of my processes. So we're better to share it, right, than doing it live together. So I'm currently working on a strategy today, which basically trades an inside day. So it's super, super simple. In fact, let me give a bit of context before we go into the actual strategy stuff. How are we doing? Getting ahead with Dr. Ojo. Good morning from here. Did you say streamer? It's called StreamYard. So let me show you. This is it. It's a brilliant platform. And see, we're live now across six different channels. So we've got the Darwinex, Darwinex Zero, and my own personal YouTubes and Twitter accounts or X accounts. Sorry, Elon, don't shoot me. But for those who haven't been to one of these sessions before or don't know much about me, I'm an algo trader. I build all of my own systems and I put them within a portfolio. There has been 27 strategies running on the account that you can see on the screen, which is XAQP. How we doing, Rob? Hope you're all good, my dude. However, I've recently increased that to 29. I've been testing some strategies and I've now implemented them into the live portfolio as part of my Q3 review. So I might touch on that a little bit later on, but I haven't done much live testing on those strategies now. It's now the period of all the back testing is done, all the risk testing is done. I've tried really hard to break those systems. And now it's kind of, okay, live execution, walk forward analysis, take a look at what happens. XAQP is my Darwin, which you can see on the screen. If you're unfamiliar with Darwinex, this is a risk-adjusted version of my trading strategy. I will bring over my MetaTrader terminal so you can see that as well. So you can see my MetaTrader account is up 4.6% on 100K balance. Risk adjusted, however, because I run that portfolio at such low risk. How are we doing? Risk 1%. Pleasure to have you back. Because I run it at such low risk, my Darwinex account is scaled up quite significantly. So my 4.6% return on my MetaTrader account translates to a 27.4% return once risk adjusted. Now, the only reason I do it in that way is because I like to see small numbers. I like to not worry about anything that's going on. And that portfolio at master level is designed to return anywhere between 15 to 20% per year. So nothing crazy, just with a super, super small drawdown. Just time, risk 1%. I'll go over that in a second. I like running it low risk, but when I run it onto other accounts and I set up a copier or implement the algorithms on those accounts, I do run it at higher risk as well because I know that I have the runway to do so. But when the account that I'm watching day in, day out, I like to have it running on super low risk. Hey, handsome. How are we doing, Tail? Yeah, exactly. I'm waiting for 8 months. So you can see this has been running since, or at least running on this account since the end of April. I don't really class April though, because it was like 2 or 3 days. So really in May. So December, I should pass the requirements to hit DarwinIA Gold. I've already hit the majority of them. So you can see 27%, which is more than the 20% return you need. Max drawdown is 4.33%, which is, so my return is 6.3 times my max drawdown, and it needs to be a minimum of 2.5. On top of those, however, you have to have 8 months long track record. That's what I'm lacking at the moment. So come December, that 8 months will tick over. Going into January, I'll then be promoted into DarwinIA Gold that month, and then XAQB will be open for investors. 84th, that's rough. Shut up, you. Just because you've shot up the rankings today, Tail, you, yeah. Talk to me when you're third. So at the moment, my portfolio currently stands in 84th position out of 9,018 traders. Again, for the guys who use Darwinex and use Darwinex Zero, you'll know this interface. But for the people who aren't on Darwinex Zero or on Darwinex, they might not have used this before. So this is kind of a little bit of a orientation, I guess. We currently have 9,018 traders competing in DarwinIA Silver, which is the first tier of our DarwinIA program, basically where we assess traders and provide seed capital allocations on a monthly basis. And I'm currently 84th out of that 9,000. Sounds great, but in my head, last month I ended 8th, as we can see down here. So it's a bit of a sticky one because I've dropped down the rankings by like 10 times this month. So it's slightly frustrating. However, the point of today's session, I went over some of the things that I'm doing on the portfolio as part of my Q3 review, which is where I'm taking a look at the live execution over the past 3 months and marrying that up to all of my back-tested data and everything that I expect from my strategies. Of course, we can backtest and backtest and backtest until we're blue in the face, and it's far, far easier to do so as an algorithmic trader than it is a discretionary trader. But when we come to implement the strategies live, there's 2 issues. The first one is, have you overfit that edge to the market that you've tested it on? There's things that you can do to overcome that. You can trade in sample data, out of sample data, run Monte Carlo tests, try and break the strategies by changing parameters and doing all of these sorts of tests. But you're never going to fully know until you're running the strategy live whether you've overfitted it. Basically, what overfitted means for the guys who don't know is that you have customized the strategy so much to fit a certain period. So let's say I was testing a strategy over the past 5 years and volatility was increased, and I maybe the average daily range was far larger than the 50 years prior. And I changed all of the parameters for that strategy to directly trade those 5 years of market. Now, that 5 years of market there, I might do 100% return each year. But then if you test it 5 years prior to that, 10 years prior to that, 20 years prior to that, it might be an unprofitable system. And that happens quite frequently when you get too niche into your strategies. The best thing to do, and I was actually having a conversation with the person who initially taught me how to build portfolios earlier today. And he said something interesting. If he runs a strategy at kind of base layer without any optimizations, with a one-to-one risk to reward, and it doesn't have a 50% win rate at least, then it's kind of a bit of a red flag, because the trade logic without having serious work is kind of not there, right? Or it's a little bit broken. I don't necessarily agree with that 100%. I think there's a little bit of nuance to it, but I also do something similar where before I start tweaking parameters and trying to fit it so much to a specific asset or time frame or whatever it may be, I will test it across various conditions, across various time frames, across various time periods on different assets, with kind of the baseline parameters. Okay, so I go long at the head of an inside day, for example. The reason I use inside day is because that's the strategy I'm going to be taking a look at today. I kind of know what needs to be amended or quote unquote fixed for this system. And I don't know if I will be able to fix the potential issues that it has, but I'm going to look at trying, and I want to showcase that to you guys because I think it's a really important thing to be able to stay fluid. I built these strategies. Like I say, I currently have 29 systems all running on XAQP. It's really important that I stay up to date with them. I understand how they're performing. Are the execution conditions correct? That's the second part. So I was on about overfitting, and I said there was another one. The other one, which has burnt me once or twice, is execution conditions. So when we're running back tests, it's very easy to get the most optimal conditions. Now, I do run it with some delay on trade executions because I don't want it to have that perfect conditions. I also run it with live spreads and live slippage. However, it's never 100% accurate, right? So we have to kind of account for in the future what happens if spread blows out, what happens if volatility increases, and we kind of haven't accounted for that in the strategy so far. That was if not the biggest thing that I picked up from my Q3 review, of course, because I got burnt in Q3 with it. And so I had a trade on silver. When silver breached all-time high, the liquidity was pretty much sapped from the market, and spread kind of blew out. It was equivalent to like 100 pips on euro dollar, right? It entered me into a trade, hit stop straight away, and boom, straight away I'd lost 2.5 times what my actual stop was on that trade. That was a tough lesson. It is what it is. We've recovered pretty much from that, but it's in my head now that if that happens again, I know that that's a situation that I haven't accounted for in my strategies. I know that it's something that is likely to happen and already has happened to me in a 6-month period. So if I go another 6 months, and even if it happens once, I got off, fairly scot-free just by losing, 2.5 times the original amount on the trade, but it could have been a lot worse. So it's really, really important for me now to know that moving forward and be proactive with those changes. So one of the things that I've been doing is I've been working through all of my strategies. I've been going through the market execution strategies first, and then working through the limit and the stop order strategies second, because they're less important from a spread perspective, because often I just leave orders in the market. So what I'm doing is I'm adding a spread filter. So I'll go through, I'll take a look at an average spread of an asset, and then I will kind of decide, okay, well, what's the max spread I want to pay to get into that position? So on dollar yen, it might be 10, for example. Now, 10 is still relatively poor conditions for a liquid asset like dollar yen, but I'm still happy to get in a trade with that because I know it to be profitable over a long period of time. I can account for that. I can test that. What we can't test for is what happens if the feed breaks or the Japanese prime minister, gets booted out of is it prime minister or president? I don't even know. But let's say something big happens and spread blows out, my system pings, and I'm already 50 pips offside. Well, I need to be aware of that, and therefore I'm happy with trades up until 10 pips as an example. Anything above that, I want the system to look at the trade and go, we don't want to get in the market at this point, because even though it might win, even though it might be a winning trade, I don't want to pay up by 50 pips, 30 pips, 20 pips. I had an example actually on dollar yen last week where this happened. Spread was about 40 pips because it was, I think it was either a Sunday open or, rollover at night. I can't remember what day it was. And I got triggered into one of my strategies, which uses SMAs, okay, on the daily time frame. And it was the first time that I'd been entered in that strategy since inception. So if I bring this over shortly, the guys who were in yesterday's session will understand this, but this is basically my all of my strategies. Okay, this is where I keep all my information. This is where I keep everything sort of up to date for me to take a look at. The strategy I'm talking about is this SMA pullback here. No, I'm not. I'm talking rubbish. It is this one. So it was on the daily. One of the changes I've made is I've dropped it to the H12 because when I added the spread filter, basically what happened was I lost about 45% of the trades amongst the time period that I test on. So my final back testing period is 8 years. I'm not too concerned about data longer than that. I test for it. I account for it. If the strategy blows up in that period, it's not a good sign, but I'm also not too bothered about what happened, 20 years ago. I see back tests running from like the 1960s, 1970s on the S&P, for example. And I always think, whilst markets are very cyclical and things happen the same, conditions the same in the 60s as they are today? Of course not. So I'm not too concerned about price action from the 60s, 70s, 80s, 90s, or even early 2000s. I'm just not bothered about that, because the advancements in tech and the advancements in even having like electronic trading, stuff like that, the conditions and the access is just completely different. I'm aware of that time period. I would like my strategies to work during that time period as well. But if they don't, as long as the past 8 to 10 years, maybe 15 years has been profitable, and year on year, it's not like all of your profit comes from one trade. So you can see, for example, with this SMA pullback system, it's pretty standard. It's quite what's the word? It's quite consistent. The distribution of gain is split pretty fairly or pretty equally through all of the trades, right? It's not like every trade made 0.1% gain and then one trade made a 10% gain and then that skews your data. It's like pretty consistent the whole way through. Now the daily, when I ran this on the daily, it looked very similar to this, probably about half the amount of trades. When I added the spread filter in, because it was entering on the close or the open of a new daily candle, what would happen naturally, the spread would blow out anyway. It didn't have to be like a big blowout, but it was larger than my limit of like 10 pips. So I sat back and I thought, okay, can we make this work on a lower time frame that's still, you know, one of the higher time frames that we can. I don't want weekly. I'm not too bothered about weekly. I think I have one strategy on that. So I dropped it down to the H12, started to get really good results because, you know, you have kind of a 50-50 chance whether price is going to enter on the daily close or whether it's going to enter, you know, at the top of the hour at 12 p.m. or at noon. And so that's how I decided to approach this system. It actually performed better, had better risk-adjusted metrics. So what I mean by that was the return to drawdown ratio was better on the H12 than it was on the D1. Anyway, I haven't got to worry about the spread because this also includes the spread filter. So even with that, I've got more trades, better risk-adjusted metrics, and no chance of being blown out by spread, whereas I did with the daily. So this was a change I made yesterday. I've kind of lost the reason. I've lost my train of thought of why I even got talking about this. I think it was just basically due to talking about the spread filter. Oh, that was it. So I was entered this on Sunday, I believe it was, and it was the first trade that I had with this strategy since it being live. I implemented it months ago, but because it was on the daily, it didn't enter very often. Essentially what this strategy is we have two SMAs. If price is above it, it will go long. If price is below it, it will go short. But what it does is, let's say, let me pull TradingView up so I can show you. It's easier rather than me just, you know, explain it with words, trying to show you. So SMA, that's what it is on. If I'm not mistaken, it's the, is it the 20 and the 50? Let's have a check. The 50 and the 200. Okay. This strategy is also FIFO compliant. So basically it will only take one trade at a time. I do that with a lot of my systems, is trying to make them so that if it's already in a trade, it won't enter another trade. The reason I do that is because I know a lot of hedge funds over in the US, they have a specific requirement for something called FIFO, which, like I say, is first in, first out, basically saying you won't enter another position until your first position has finished. Okay, so this strategy, let me make that gray line slightly a slightly better color. Let's make it yellow. Whack it up. Okay, so the logic here, it's above the two SMAs. Now what we want is 3 days, 3 down days like this. So you can see there's 3 bearish days here. Okay, 3 bearish days. Then we have this day, which is a bullish day. By bullish, I don't mean it doesn't have to be a specific candle. It doesn't have to be a specific size. All it needs to do is close higher than it opened. Okay, once that's happened, the strategy goes long on, or what was the close of that daily candle. Again, I don't know exactly what the stop loss and the target was when I had it on the daily. I can probably find out, but it doesn't translate correctly over to TradingView, I don't believe. Where are we? 0.5. Okay. Oh. I'm not sure if I've changed that. I don't think I have actually. A one-to-one on this sounds pretty spot on, to be honest. Okay, so that is roughly the trade. Okay, that's roughly the trade that was being placed on, which day was it? On Monday. Yeah, so it was. Friday was the bullish day. And so the logic was 3 bearish days followed by a bullish day. We then get long. The SMAs are used kind of as a trend filter. So again, if we're above the SMAs, we go long. If we're below the SMAs, we go short. And then what we're looking for is we're trying to add a little bit of price action, if you will. But I mean, it's very basic price action, but it's, you know, if we're in an uptrend, right, there's only a limited amount of down days we should have before we continue the next leg up of that uptrend. Hence why we look for 3 bearish days and then the bullish day. The bullish day or this 4th day in that sequence is kind of the reassurance to get in the market, because what would happen if I've just read Rob's comment as well. I think these are the better sessions, going over more insight and Darwin's, including yours and that. So there's many YouTube videos explaining Darwin in general. Yeah, 100%. And I did hundreds of welcome sessions. I'll still do the strategy development sessions, but I think whilst I'm in the Q3 review, we should really capitalize on this content, because, well, the feedback I had yesterday was fantastic. And I also get a lot of questions about this, you know, on my personal channels. So I'm hoping that this provides value to somebody, whoever's watching this right now. The great thing about this strategy, like I say, is even if, and thanks for the kind words, Rob, appreciate it. If it carried on falling, okay, and it got to 5 or 6 down days, and then we had the bullish day, well, guess what? It's still looking at the past 4 days, so it's still going to trigger. So even if it carried on coming down, it's basically waiting, stalking price action, waiting for that bullish day to trigger. Now, of course, I ended up paying up on this specific trade by, how many pips was it? So I think it was about 40. So it must have been about 90. Okay. So I must have got in the trade about there. Okay. Now what that does is, if we now stick another P&L on, so this is what I probably would have gotten during a back test. I probably would have got the best fill. Like I say, I try and match live conditions as best as I can, but they're not always 100% accurate. Now, if I'd have got into that position, what would have happened is I would have paid up by 40 pips. Okay. So I'm still having, technically, I'm still having a 1-to-1 risk to reward on that trade, and it still would have worked out in this specific example. It still would have worked out, I think. Yeah. So I might have almost been stopped out, but it still would have worked out. However, what happens is, if something like this happens, okay, and we enter, it goes up and it hits what would have been the initial target and then carries on for a down move, our data and the strategy is actually still correct, right? Because the original entry, the original stop wasn't hit, and the original target was hit. But I got into the trade paying up by 40 or 50 pips. So I didn't hit my target, but I did hit my stop. Is that my fault, or is it the strategy's fault? Well, it's neither, right? It's the execution conditions. So we have to be proactive in thinking, okay, well, we can't let this happen again. And I exited this because of this reason. So when I was in the trade, which I don't usually do, right? I don't usually intervene because my systems are automated for a reason. But when I realized I'd paid up 40 or 50 pips, I was like, I need to get out of this position. I'm going to reassess as part of my Q3 review and see how we can, you know, overcome this in future, because I don't want this to happen again. One of the easiest ways was adding the spread filter, but also dropping down to the H12 timeframe. For those of you who, again, wasn't on yesterday's session, I also run Monte Carlo tests on all of my strategies. So I know what my results would look like within sort of a 95% confidence level. So with this strategy, for example, there's not too much variance. So you can see the original statistics is a 4.89% return with a max drawdown of 0.75. Although I think that's equity, that's balanced drawdown, not equity. Yeah. So the actual equity-based drawdown is 0.9%. Okay. So 0.9% drawdown over an 8-year period to return 4.88. Okay. For me, that's fantastic. I've always got a place in my portfolio for a strategy like that. When we run the Monte Carlo at 95% confidence level, and for those who are unaware of what a Monte Carlo test is, you basically run a simulation of X amount of simulations. So this specific one is 100, although sometimes I do go up to 500 or 1,000 simulations and run multiple. We're basically randomizing the outcomes for 100 times of all of your trades, okay, and seeing what difference there would be in the equity curve with randomized outcomes. And so we can say within a 95% confidence level, based on those random outcomes, I still would have returned 4.39%. Okay, so that's about 0.5% less than I did on the original back test. So there's not too much variance there. It's not going to blow up the portfolio. The strategy is still solid. I would still be happy with a 4.39% return. However, the max drawdown with, like I say, with 100 randomized outcomes, we can say the drawdown shouldn't have exceeded 1.95%. Okay, now that is a bit of a variance. That is slightly concerning. It's not too concerning for me because I run it as a portfolio. So a lot of my drawdown gets hedged against anyway, and the drawdown turns into stagnation instead of just being kind of a steep slope of continuous losing. So I'm not overly concerned. However, that's pretty much a 2x of my original back-tested max drawdown. So now what I want to do is when the strategy goes live, which it has been for a while and should be more frequent now because I've dropped the timeframes, is monitor the performance and monitor the drawdown in real time. If we exceed this 1.95%, I know that the strategy is probably overfit and probably isn't going to work as well going forward. So this is kind of my minimum level sort of or my minimum barometer of the performance for that strategy moving forward. Tal said correlation is based on 6-month data with the other person. Yeah, that's correct. Because it looks at those the same three metrics for DarwinIA. Chief, what's the reason a lot of stocks are not listed on Darwinex Zero? The main reason is liquidity. So when we're looking at stocks to add, obviously it all goes through our liquidity providers. But if we can't guarantee liquidity to clients, bearing in mind that it's not just like, we're not just a normal broker where you would open an account and trade the stocks with, on average, like a 2 to 5K account. You could get investor capital or DarwinIA capital, and then it becomes very difficult to scale if we're offering stocks that are super, super low liquidity. Do you mind adding the ones I want to use? I can ask the team if you've got any specific stocks, then just drop me a direct message on Discord and I can go away and ask the team. The worst they're going to say, the worst thing that they'll say is no, but I can always ask that question. That's no problem. Absolute nightmare. I just spilled coffee all down myself. Great. Oh well, is what it is. We move on. Okay, so that is I've gone off way on a tangent there. That was the SMA pullback strategy. I think I did that yesterday. I might have even shared some of that on the live session. Wife will be happy. Yeah, I mean, this is fresh on today, right? Believe it or not, because I think I wear this in a lot of the live streams. But yeah, she's clean this. It's fresh on today, so I'm going to be taking it back downstairs and asking her to do it again. What have I been working on today? So we go back to inside day. So one of my favorite strategies is an inside day break. Okay, so let's clear this. I'm going to show you the logic that I'm looking for as well. So an inside day is effectively this candle down here. Okay. So what we're looking for is a candle that's high and low was inside of its previous candle. And I do this on the daily time frame. I'm only looking for inside bars on the daily time frame. Quite a well-known concept. Traded on its own, it's a pretty useless strategy in my opinion. But traded as part of a portfolio, it adds a nice level of diversification. I class this as a breakout strategy. However, it's quite nuanced in the way I approach it. Tal said, might be a stupid question, but if somebody wants to invest in XAQP, they can only do so via Darwinex, right? Yes, that's correct. Although I do have a lot of connections in the fund management space, and I am trading it for another fund as basically a strategy provider to them. But that's a kind of a private level. It's not kind of open to investors, and I would take capital in myself because I'm not regulated to do so yet. Although next, how are we doing, Legend? I am looking next year to do my IMC and CFA qualifications in the UK so that I can start climbing that ladder to be able to, myself take in capital. But yeah, if it's like a retail investor, then yeah, I'm only gonna offer it through Darwinex. If it's a professional investor, i.e. a B2B investor, a fund, then yes, I will offer it as a strategy provider to that fund, and they can pay me performance fees. Could you guys add platinum? Oh, God, coffee all down the desk as well. Could you guys add platinum and palladium to the instruments on MT5? I will ask the question as well for platinum and palladium. I've traded both in the past. I like both of them. Prefer platinum, but I will ask. I think again, it's all about the liquidities in the liquidity in the CFDs. But I will pose the question and see if we can get them added. because yeah, I think having platinum, palladium, copper would be great. Also, I think, is it Brent we don't offer? Maybe we do. Maybe we do. I barely trade all, so I'm not sure. Anyway, back to the inside bar. So we can see this candle, the low is higher than the candle before, and the high is, of course, lower than the candle, the high of the candle before. So this is what we call an inside bar. Okay. So now we've got that, which is what my expert advisor or my algorithm is looking for. So we're looking for the candle high of the previous candle is below. Sorry. So we're on current day. This is where it gets confusing. Okay. We're on the current day. The previous day's candle, which would be the inside bar, is candle 1 because it's back 1. And then that is the inside bar of the candle before that, which would be candle 2 because it's 2 from the current day where we're looking to trade. Okay. So we're looking for the candle high of candle 1 is below the candle high of candle 2. Okay. In essence, that is saying, is this high lower than this high? Yes. Okay, the second condition is this low higher than this low? Yes. Okay, so now we've got our inside day. So now the algorithm is looking at this candle only. If we pull back, I canceled my TraderView subscription a couple of months ago, so I don't know if we can use it. There we go. Oh, I got an annoying watermark though. So now we've got our inside day marked out. So what my algorithm does is it sets a limit order on the top, and it sets a limit order on the bottom. What it actually does is has, I think it has a stop at the bottom. This is what happens when you've got, so when you get to like 10 or 15 strategies, you start to forget how they're all structured. So percentage of the price, percentage from stop loss. Okay, I didn't, interesting. So let's take a look at it actually. Inside day, inside day, inside day. Here we go, inside day. So stop loss, so 0.25%. Okay, I keep doing that. So 0.25%, we're looking at something like that. Okay, same on this side, 0.25%, which is something like that. That's the stop. And now I trade it with a 50% of that on the target. So it's a negative risk to reward system. Just double check. So TP multiplier is 50. 100 equals a 1-to-1. So we're going for a negative risk to reward here. So this will be about there. And this will be about there. Okay, so it is a negative risk to reward system. However, it's a fantastic system, and I'll show you why. Because euro dollar inside day. Take a look at the equity curve on here. It has insane winning periods. Now, something that I explained in yesterday's session, we've just ticked over 1,000 viewers as well. So thank you all for joining us. I appreciate you being here and listening to me ramble on about algo trading and portfolio building. What we have here is a strategy that just chips away. Okay, just chips away over time. It doesn't make any crazy gains, but it doesn't have any stupid drawdown periods. Now, the drawdown periods where it does take losers, of course, the losers are going to be far bigger than the winners. However, when you have multiple high win rate strategies that are all uncorrelated but running simultaneously, is you often hedge the bad periods of those strategies anyway. I spent a lot of time researching and running simulation tests on high risk to reward systems versus negative or low risk to reward systems as a portfolio as a whole. My findings, and not everybody is going to agree with me, and that's okay. And actually, that's the beauty of trading, is that we can all have different opinions and different ideologies, yet all be profitable or make money. Me making money doesn't take away from somebody else making money, which is the great thing. But what I found is running multiple low risk to reward strategies provides a much smoother equity curve than running multiple high risk to reward strategies with a lower win rate. So this strategy specifically has, and again, this is all hypothetical for the guys who have just joined, and before you jump down my throat and say, oh, this is a back test, it's all hypothetical. Of course, I know that. And I kind of give that disclaimer out constantly and say that I do monitor live performance, and especially for the inside day strategy, it's so simple. It's very difficult for the live performance to not match or mirror the backtest performance because the logic is so simple. I've just realized I have tuned this down on my portfolio because that equity drawdown should be 1%, meaning the total net profit is probably about 6% or 5%. But you can see overall it has a 76% win rate. Okay, so it does have a really high win rate, but I have multiple of these sorts of strategies running at the same time. So even if, you know, we go on a bad period like this patch here, where it takes a few losers in a row, well, that's fine because we might have other strategies that keep, because they have higher win rates. There's a very low chance of all of them going through that sort of drawdown period at any given time, meaning that instead of actually going into drawdown, the portfolio just stays in a little bit of stagnation for a period of time. Okay, and the strategies sort of hedge against themselves. But then when all the strategies align, which is likely to happen if you've got a load of strategies all running at 70, 80, 90% win rates, when they all align, then you'll see your equity curve boom. You'll see this sort of movement. However, I'm not happy with it for two reasons. One, I need to put a spread filter on, which is kind of going to be slightly counterintuitive because it will measure the spread filter on the close of the day, purely because I want to know the high and the low of that candle ASAP. So I'll get the pending orders set, pretty much straight after the candle close, probably about 5 or 6 minutes after, the daily candle open, because what I don't want to do is break the inside day high and then set a pending order because the trade is already done. Now, what I can do, I suppose, is cancel the pending order if we've already touched that high, and that might be something that I look to build in. But initially, I need to add a spread filter into this so that during highly volatile periods, I'm not going to experience a spike to enter me and spike to hit my stop straight away, like I did with the silver trades, because that is not a condition that I want to be executing in. The second thing is when I ran the initial tests on the inside day, and I don't think it was on euro dollar, I think it was on dollar yen, I ended up blocking out June and July, as you can see on here. Every time I ran them, June and July consistently, we're just losing months. And that's okay. Sometimes you do have strategies, and I have a few that I only run at certain times of the year. However, what I would like to do is run some more tests, change a tiny bit of logic to see if we can get more consistent performance through those periods. Maybe it's adding some form of trend filter. So again, let's say we add a moving average into this, and we only look for inside bar breakouts to the upside when we're above the moving average, or inside breakouts to the downside when we're below the moving average. I personally don't know what that filter is going to be yet, and I'm happy to keep the strategies as they are for now, but I will do some more testing to try and find a way to better these systems, because I don't really want to turn them off in June or July. But if we bring up this, so this is the portfolio overall. Again, this is back-tested performance. I have been running it live, however, since May. The numbers don't 100% match up because I didn't start with the full 29 strategies that I have now. So I've implemented more systems over time. And also the September figure for this year isn't correct because I haven't ran September through October on all the strategies yet. So September, October, and the year-to-date figure for this year aren't 100% accurate. They should be slightly higher because September was actually a fantastic month. So the figure for September should be about 2.5, maybe 3%. No. 2, maybe 2.5%. So the year-to-date figure should be slightly higher too. However, all that aside, this is what the portfolio looks like as it stands right now. Now you can see June and July. I've actually not had a losing month in June and July over the course of the past 8 years. Okay, so maybe what I'll do is start running the inside day breakout strategy, removing the blocker for June and July and seeing if it affects that. If it starts dampening my performance, then yeah, maybe I'll keep the strategy outside of June and July. But again, going back to my point at the beginning, what I don't want to do is overfit the strategies to the previous testing data. And if I start adding in filters like the spread filter and the slippage filters that I'm going to add, then I want to know what the strategy looks like from a baseline perspective. If I then decide to block out June and July again, then fantastic, I will do that. And in fact, that's what we'll do together now. So let's get onto FX Streamer. Now, this is probably going to get slightly technical, so I'll try and talk through things that I'm doing, but if I lose you in terms of like you struggle to follow what I'm doing with the block builders, this is basically, for the people who don't know, it's a no-code platform to build automated trading strategies, so you don't have to go and code all of your systems. It is quite complicated to use, so I'm going to try and go through it. I won't explain everything, but you might be able to follow and understand. Tal said, since you're able to make these strategies, would you be able to manually trade with this knowledge? Yes, of course. However, there's so many issues that you come into there. The first issue is I'm trading 29 strategies. It's going to be very difficult for me to keep up with 29 strategies. Bear with me a sec. I'm just going to open my window. It's getting slightly warm. B, I have zero emotional attachment to my trades right now. If I start pushing the button, that could creep in and I could start making poor decisions. So yes, in theory, I would be able to manually trade based off the logic that I put into these strategies, but no, I wouldn't do it because it wouldn't make sense to. It's kind of like, I don't know, kind of like saying you've got a car that drives and then getting into the Flintstones car where you have to move your feet, right? It doesn't make sense to do. That's a really poor analogy, but I hope it makes sense. Something else that I'm going to test with this as well is instead of running it for this tiny risk to reward, instead look at, because look at that, right? I might look at taking the target off and basically closing it out on a specific time of day, for example. So maybe setting a positive risk to reward of 3, like that, for example, and then setting it to shut. I mean, in this case, it's very easy to say because we go, oh yeah, you want to hold that for a couple of days, but we could test, okay, what about if we close it at, the close of play on that second day so that we don't pay swap fees or anything like that? What happens if we hold it for an extra day? So we hold it through to, the second day post it. What happens if we just hold it till the end of the week? There's so many things that we can do with this that doesn't change the logic of the strategy, but it just changes the trade management logic. Because as of right now, it's a negative risk to reward system and it works and it's great. And I don't want to rock the boat with that. But is there a better way that we could manage this strategy? Again, I don't have the answers. I don't know that, but it's something that I want to figure out. Because at the end of the day, I want this curve to be more stable. I want it to look better, and I want to give investors and myself the best chance of success. So if there's anything that I can do to make a strategy better, not over optimize it, but make it stronger, more robust, then I will do that. Okay, so let's jump straight in. So I'll talk you through the logic. So once per day at a specific time that I set, this is a condition that I can change whilst testing. So we have it set to a condition. It then checks if there's no positions. So basically it won't double up on trades. What I need to do with this is change that to pending orders as well. However, I don't want to do that yet. In fact, I might get rid of that no position. Because if we have this, then it's not. Yes, that's going to be an issue. So the issue I have there is if yesterday was an inside day and it sets orders and it tags, and then you have another inside day, but you're still in that trade, it won't trade the second inside day, which has happened to me once. So I have to be aware of that. So I may remove that. How are we doing, Legend? Hope you're all good, dude. Laffan said, time-based strategy is something I can't fully adopt, but time-based entry is doable. So I've actually got 2 strategies that close at a specific time of day. And it works well for those strategies. So one of them was one of my silver systems, which is this one. So this closes at a specific time of day. And the reason I included a time-based stop on this was because if you was in yesterday's session, you'll know this anyway, but I had back here, there was like a massive loss. And I was trying to figure out why it was. And it was actually one trade, but what had happened is it had held it for days and days and days. And it was a short trade, negative swaps on silver on shorts. And I ended up paying pretty much double the loss in swaps. So the strategy had lost like $300 on the trade or $200 on the trade, but I'd ended up losing like $700 or $800 overall because of the swap fees. So I was like, okay, that's a big issue. So at first I implemented a time-based stop for shorts only. So it would manage short trades differently to avoid paying swap fees. Then the curve didn't look as good. It was a little bit, something didn't feel right. I felt like, again, I was kind of over optimizing. And so then I implemented the time-based stop for all trades, and it actually smoothed out the curve a lot better. So I've left it as it is for now. So it does exit positions on the same day to avoid paying that. Legend, yeah, I'll do a Darwin review tomorrow. PWBV. I thought that was Sorrow Trades Darwin then, but it's PPWV, isn't it? If you jump in the session tomorrow, I'll go live at 4 p.m. UK time again tomorrow. I'll do a Darwin review. Flatten out position by end of day suit for day trader. By the way, I'm Tan here. How are we doing, Tan? Hope you're all good. Yeah. I think a lot of my strategies kind of are day trades. There's a couple that I'm happy to hold for a little bit of a longer period. For example, if I'm long only on gold, like if I have a long only gold system, which I do, then I'm happy to kind of sit in that for a period of time. Yeah, Casey Courtney, does FX Streamer use the custom chart event method for multi-symbol EAs? If not, I wouldn't use it then because of misticks, etc. Custom chart event method for multi-symbol EAs. When you say multi-symbol EAs, do you mean one EA trade in multiple symbols? Which I'm presuming it does, but I don't run mine in that way. So I don't have the answer. I don't have the knowledge for that. Yeah, so I don't do that. I run an EA for each individual symbol, so I haven't tested that. It may do, it may not, but I don't want to give you misinformation on that. So okay, back to inside day. So what I'm looking to do, I added this earlier, so once a day delete pending orders, because what would sometimes happen is, so in this specific example, right, we would have hit target on that trade. Cool, that would have gone. However, my pending order would still be in. Okay, so I don't know, I can't remember exactly what it was, but something like that. Now, my pending order would still be in now, weeks later. Is that inside day still relevant? Well, of course not, right? It's not relevant at all. So I need to start deleting them. What I was doing for a period of time is just deleting them manually. So I'd leave it in. I'd leave it in, for example, if we stuck around here, because it's a low risk to reward system. And generally, I didn't see any harm in holding it throughout the period of my history of trading it, my backtest history. However, now, for example, up here, how many pips are we away? Like 500 pips. I wouldn't want this order still to be in the market. Okay, so I started deleting them manually. So I just need to add a filter in to block those out, which is exactly what I've done here. So it's going to delete pending orders at the end of the day. What that's going to do, however, is if the inside day doesn't get triggered, so if this didn't get triggered, it will delete the order and there will be no more orders for this. So I am expecting that the trades, the amount of trades will go down quite dramatically. If we take a look at Euro Dollar 1 again, inside day, I'm presuming that we're going to lose a lot of these trades. However, if it makes it more robust and I have better risk-adjusted metrics and the Monte Carlo testing variance looks better, then I'm happy. I don't need to take more trades. I need to take better trades. So that's all I care about here. And maybe that will also fix the June to July problem, because when you have an issue like June to July is underperforming, as soon as we add another variable into the mix, you know, I putting a spread filter in or deleting pending orders at the end of the day, that can completely change the whole data set that you have. It doesn't just change a tiny amount. That one variable can completely change the strategy. It might even blow it up. And we might just say, okay, well, it's best to stick with it how it is. However, adding the spread filter in, it's very rare that harms the strategy. Let's put it that way. So I added that in earlier. I need to add that. So instead of keeping it to a fixed variable, I've put it in as a constant so I can change it when testing it. So let's add that. Stop loss and take profit. So we'll keep them as they are for now. I'm not wanting to remove them. Another issue that I have with this is if we close this down. So I was in a trade, an inside day trade. Oh no, it's not an inside day trade, but it's a similar strategy. It was a standard breakout strategy on the Nasdaq. Again, very, very similar, negative risk to reward. I hit stop on it well, an hour ago when we first started this session, but we had a pending order in from this high. So I was already in a trade, but it was willing to take a second position. Now, I don't risk a lot, so I'm not too bothered, but that can cause extended drawdowns that don't need to be there. Okay, so it's really important that I test, okay, removing the pending orders if we're already in a position. Again, so that we're FIFO compliant and so that I know and understand all of these different variables. What is this called and what are you doing? I'm presuming you're asking what FX Dream is called, but I basically, I build strategies, put them into a portfolio, and then run it on Darwinex. So this is my Darwin. I'm sure you've seen it before, Tan. So this is my Darwin. I have 29 strategies all running simultaneously on this as a multi-strat portfolio now. So at the minute, I'm doing a Q3 review, going through all of my systems, making sure they're optimized, making sure the execution criteria or the execution conditions, aren't affecting the performance of the strategies, which I explained a little bit earlier on. I had a few issues with silver, so I've had to go in and add some things, but I'm now proactively adding things like spread filters to all of the strategies, so I don't experience that hell again. So this to me looks like it should be good now. Okay, let's test it. So now we've got the MQL5 file. Bring it to meta editor. That's what I was going to do. I completely forgot. Oh no, I have removed. I've removed the month filter. So before we had a filter first with the month filter, and that was set to disable or reject June and July signals. Okay, so I have already removed that. So this is going to be a completely different strategy now to what I had before, because we've made quite a few changes. So we've made the changes to enable trading in June and July. We've enabled a spread filter. Now I'm freezing, so I'm going to remove it. We've done the June and July. We've enabled the spread filter, and we've also opted to delete pending orders at the end of the day. Okay. So now we're going to test this. So we're going to go inside day. I don't know why it says fade. Inside day break. New. Okay, so now I've saved that. I'm going to compile it. Let's get rid of these. So I'm going to compile this. What that does is adds it to my MetaTrader, which is where I do my initial testing. Okay. So we're going to view, I've already got it open, strategy tester, refresh the strategies that I have, and now we'll see it here, inside day break, new. Okay, so we're going to test on the daily time frame. What I am going to do is bring up these, because this is the variables or the settings that we had before. I think the risk is too high. I think on the actual account, I have it running lower. That's not the one. Euro dollar. That's not the one. June, July block. So I actually have it running on 0.15% risk instead of 0.6. But for the purpose of this, I want to match the new equity curve against this. Okay, so we can adjust apples to apples and not apples to oranges. So I'm going to run it at the same risk. I'm going to run it at the same TP multiplier to begin with, and then the same stop loss size. If we confirm that, the performance doesn't get hit too much by adding the things in that we've done, I can then look at, okay, is the 0.5 risk to reward worthwhile now with the new filters in, considering that we're closing the trade or deleting the pending orders? Do we want to try and run them slightly further? Then I'm going to look at, okay, well, now how do we build that in? Well, we're going to remove the targets and we're going to implement a time-based stop. We'll set it as a variable so that we can change the day that it closes the trade. And what it might be worthwhile doing is putting, for example, a 3-to-1 risk to reward as a set variable. So it will close at 3-to-1 risk to reward. But then you know, on the next day or 2 days later, we close the trade anyway, regardless of whether it's hit that. That's the sort of thing that I'm going to play around with this system, because I love the logic, but I think there's a lot that can be improved. So we've got real-time ping, every tick based on real ticks. We're running on Darwinex as well. So we've got Darwinex tick data. So it's 0.6, TP multiplier 50, stop loss was 0.25. 0.2. Was it 0.2 live? Yeah, 0.2. Okay. So 0.2 server time. So that's when it'll enter the orders. Spread. I mean, we're testing for euro dollar. So really the max spread that I want is kind of, what's the live spread on euro dollar? I would say 10 is kind of my limit, but I would ideally want it lower. Let's leave it as 10 for now. Okay. And now we're going to run this back test. It usually takes about 30 seconds to a minute before it starts. Jason said, would the FIFO rules allow for adding to open winners? It depends. Like, from different funds I've spoken to, they have a different approach, and it's kind of more of a discretionary rule for them. What they don't want you to do is mainly add to losing trades like Grid and Martingale. But like I say, they implement a FIFO rule. It's up to them whether they accept, you know, that you add to winners, basically. Okay. How do you build? Let me just check. I've got it on the right time frame. Yeah, euro dollar daily. How do you build a strategy, and where do you do that, and how do you do that? Sorry for the silly questions, but it's just new to me. No, it's fine. So initially, I think of an idea. So, I mean, I've been around markets for a long, long time. First started in 2016, and then I started trading FX properly about 7 years ago. So I know a lot of concepts. I know a lot of, you know, basic knowledge when it comes to patterns, trading ideas, strategies. So I'll think of an idea. I was a data analyst before I become a trader as well. So I have a big background in data. So I love trading data points. For example, if this happens, then this happens. So it's not specifically chart or indicator related, for example. So I'll think of an idea. I'll try and build it. So I can code, not very well. So what I'll do is I go to FX Dreamer, which is a block builder. There's a few others as well. I mainly use FX Dreamer, but we do actually have a Darwin called PYE, and he's built a platform called Perfectus AI, which is virtually the same as FX Dreamer. Bit of a nicer interface. I just haven't dived into it too much as of yet. Once I do that, I download the code. You basically build blocks of code together to build a strategy. I then take that away, test it, see if any changes need to be made, does it perform, yada, yada. And then I'll make any changes that are required. And then I'll start doing walk forward testing it in live conditions. So that's how I do that. I mean, I've gone over quite a bit in today's session and yesterday's session. Yesterday's session was the first time I ran it on the, yesterday's session, I didn't run it on my own personal channels. So you'd have to watch it on the Darwinex channels, which is fine. But I went over I went flipping hell. I can't talk. It's getting late in the day, and I got parents' evening tonight for my little girl. So pray for me there. Yesterday I went over some stuff. Today we've gone over more like actual dealing with the platforms. So it's worthwhile watching both sessions back again. I'm not saying everybody has to do this and this is the right way to do things. It's just the way I do things, right? But at least you know when I'm talking about this sort of stuff that I have, like, this is my record. This is me trying to back it up, right? I'm not just some idiot on YouTube talking for clout or falsifying things. Like, this is my record. I'm super proud of it. Okay, so this was the previous report. Now we can see by adding that spread filter in, it's changed a lot about what happened here. And by adding the, I think probably what made the biggest change there is by removing the orders on a daily basis. I'm actually surprised that there's still quite a lot of trades. 325. How many did we have before? 327. Bearing in mind, there's a few months added on as well. So this report, I believe, went up to July. So we've removed quite a few trades, considering this has probably traded quite a few times since then as well. It's not as many trades as I thought it would be. I wonder if it actually has. I wonder if it has been deleting the pending orders. How many trades? 325. That can't be correct, because it's trading June and July as well. No, yeah, it probably is correct, because we've added June and July in. The number of trades would have increased, but we've added the spread filter and removed pending orders. So it just so happens that there's not much difference in the total number of trades, which is interesting. Okay, so the win rate is still the same, 75%. 79%. So the win rate's dropped by 4%. Now, what I'm guessing has happened there, which is what I've seen before, is let's say we have an order. Let's say we have an order like this, and then price tags it and dilly dallies around. Meanwhile, it then sets a new order on that high, and then does something like this, boom, and then hits target on both. It's kind of like we're doubling up on the winners. Okay, so I'm not surprised that the win rates dropped slightly. At least on the long side. 71%, 73%, so it's dropped by 2% as well on the short side. We did profit factor 1.46, 1.25. Okay, so that's not a good sign. So the profit factor has dropped quite a lot. I ignore MetaTrader's Sharp ratio because that is just complete and utter BS. I can't say what I would usually say because I'm also streaming on Darwinex. Drawdown 7%, previously was 2.47 with a return of 25k. Now it's returned 14.5k with a drawdown of 7%. Okay, that's interesting. So basically, I've effectively blown up the strategies by doing this. Okay, so it's interesting. The biggest losing months, April and June. Okay, so maybe this strategy just doesn't have as much of an edge in April, June, and July. Maybe in October and December. The problem is, do I want to start cherry picking months? At this point, probably not. But we clearly have an edge in some months that we don't have in others. Now, what I would like to do to try and do that, rather than blocking the months out, is find a different way to manage these positions. Inside bar trading is like, it has been around for God knows how long. This has been around for donkey's years. Okay, so I haven't invented a new concept that we need to test if it works. I haven't reinvented the wheel. This is something that we know that works. We just need to figure out how do we best manage the trades when we get into them. Tan said, how do you build your code? Like you said, you're not good, but you're still able to. How? So this is the platform I use. So each of these blocks, okay, each of these blocks blocks holds the code within it. So for example, this once a day, this holds the code to say once per day in MQL format. When we're looking at spread filter, for us at the front end, we're basically saying we want to execute if the spread is lower than the spread that we've set in the variables, but that translates to code. So there's already preset or predefined code here. You can add custom code in, but I'm not good enough of a developer to do that. So I just basically use building blocks. A couple of other Darwins that do this just off the top of my head, so that you know that this is quite common practice. PGLM has been around for 2.5 years. He uses building blocks or code blocks to trade. IME also does. The trader behind IME is the person who initially taught me how to do this. Again, he's been around for almost 2 years. He's now managing 670k of investor capital through Darwinex. And we also have PYE is another one off the top of my head. So PYE is Perfectus. They're the guys who built Perfectus AI. They've had a silly run recently, managing 605k through Darwinex. I think their record is how long is that? 1, 2, 3.5 years. But they also, the Perfectus guys, they are also their own fund. So they operate out of the Amsterdam Stock Exchange. So they work outside of Darwinex as well. They just have their strategies running through Darwinex as kind of a secondary source of income. I've actually interviewed PYE. It should be released soon. And it's a brilliant interview because in the background, you can just see Amsterdam Stock Exchange, which if you haven't seen it before, just Google it because it's stunning building. Where are we? Notion, MetaTrader. Okay, so the biggest issue here is performance has dropped now. We want to rerun this test by, I want to drop the risk to, that's still going to be 1.1. Let's go 0.08. To be completely honest with you, Tan, I learned, I mean, Blaine, who is the trader behind IME, showed me the platforms, and then I just went about and just dove straight in and started trying to implement everything that I could. The content that's out there is really, really difficult. Like there's no one video or channel that you can go on that breaks it down easily for you, which is the biggest issue. So you learn the most from experience than you do going out and watching content. However, if you guys are enjoying this, I will stream about this more frequently, both from Darwinex and from my personal accounts. I'm happy to do more streams and kind of make this digestible and bite-sized for everybody. Because the great thing with talking about this is I don't diminish my edge by helping others understand how to do this. Okay, so if I was to be trading a discretionary system, I hope everybody is aware that every strategy has an alpha cap or a maximum amount of capital that it can manage before the strategy basically starts running into condition issues. For example, getting slipped because you're trying to enter with too much size. As just a basic example. Now, if you're teaching your discretionary edge or a mechanical edge, and you've got 1,000 people in your Discord all learning the same strategy as you, you're going to run into an issue sooner or later where there's basically too much size and the edge starts to be diminished. Now, when I'm talking about building strategies the way that I do, even if I taught you A to Z on how you do it, you're never going to build the exact same strategies as I do, especially considering, like I say, I have 29 running on XAQP. You might go and build 29 of your own. Even if we have 5 strategies that overlap and that are very similar, the portfolios are still going to look completely different. So I'm happy to kind of go over things like that and do it more frequently, because, like I say, it was difficult for me when I first started. I got the strategy, but I don't know how to build the code. FX Dream is your place to be. Okay, so risk metrics are still the same, 1.25 profit factor, $1,800 profit. Again, this is over an 8-year period, remember, with a maximum drawdown over that same period of 0.97%. Okay, so really all we're suffering from here is not taking enough from our winners. So initially what I would like to do is just test it on a 1-to-1 risk to reward, maybe with, let's try with a slightly wider stop. So instead of a 0.2% stop, we're going to go 0.5. We're going to do it with a 1-to-1 risk to reward. I have no idea how it's going to go. I don't know if it's going to make the strategy blow up. I don't know if it's going to make it super profitable. I have no idea. This is just one of the things that I do when I'm trying to test and break a system. Because if this is more profitable, trading it with a wider stop and running the strategy for longer, then maybe that's something that I can explore doing and maybe implementing a time-based stop or holding it depending on what the asset is. I'm not a massive fan of holding assets just because of swaps, but we'll see. I'll run this last test. I'll take some notes and then probably call it an end to today's session because, like I said, I've got parents' evening in a bit, which is my first parents' evening ever, which makes me feel super, super old. Which I don't like. Yeah, see, this doesn't look great so far, but I remember before the 2018, 2019, this is like the strategy didn't really shine. If we, let's bring up the previous report. So euro dollar inside day. So this is what it looked like before I've taken any refinements. So it did a 5% return overall over the 8-year period. with a max drawdown of 0.88%, giving it a profit factor of 1.38. Okay, so that's better than the results that we've got by making the refinements. However, the refinements are necessary, or at least the spread filter refinement is absolutely necessary. 75% win rate. You can see it had 2 negative years in 2018 and 2019. So I think however we do things, those 2 years was just not good for inside days. Not sure what happened from May till December, but didn't seem like there was any inside days. I need to check really if that's a data error, then that's concerning, but I don't think it is. Positive pretty much every year since, other than 2021, which was a slight down year, but okay. Okay, see, so it's made that strategy basically a losing strategy. What was it going to change then? We'll do, let's go back to 0.2. We'll add 0.25, and then we'll do still 1.5 risk to reward. In the meantime, I'm going to run one more test after that, which is going to be blocking out June and July again. Great question. Great question. So Oscar said, how different is building strategies for discretionary trading from building algorithmic strategies? So that is a fantastic question. And the reason that is a fantastic question is because the difference is massive. Okay. So the reason the difference is so big is because when I'm building a strategy to be part of a portfolio, I'm not building that strategy to carry the weight of my entire portfolio. It's a part of. It's designed to make small gains over the course of a year. When you're building a discretionary strategy, you need that strategy to perform day in, day out, week in, week out, month in, month out. When I say perform, I don't necessarily mean it has to have a green day, green week, green month every day, week or month. But if it goes through a bad patch, well, guess what? Your only exposure is to that system, and you have to be aware of that. I'm not saying it's a bad thing. I'm just saying it's something that you have to be aware of. Whereas when you build a portfolio, you really start to look at diversification within your own portfolio, whether it's assets, strategy type, or, and so many more different variables that you can be diversified on, seeing how they work together and how they hedge each other. So when I'm building a specific strategy, I'm not always going, how can I make this system the best that it can possibly be? If I notice that 2018, 2021 were both losing years, okay, well, I need to find out why that is. Is it because I'm so heavily skewed to a specific type of strategy, to a specific type of market, that I've ignored, mean reverting markets? Okay, well, now I need to build some strategies to capitalize on mean reverting markets so that if we go through that condition again, I'm not left, holding the bag because my portfolio can't perform. Whereas, again, with the discretionary system, you have to be able to weather the storm no matter what the market condition is. And it's very, very difficult to do so. Firecry said, is it better to come to Darwinex with a multi-strat portfolio rather than a single strategy? I think you might have answered my question already. No, you can come to Darwinex with both, right? This, like, when I'm talking about a multi-strat, it's the way I do things. I was a discretionary trader for 7 years, and I made the switch. I'm super happy with the switch that I made. I much prefer what I do now, but that's not to say that you can't come and be a successful discretionary trader or manual trader. There's no kind of benefit to one over the other. It's just how good are you as a manual trader? How good are you as a multi-strat fund or portfolio? That's the real question. Okay, so now we've added the June and July blocking. I want to test that to see if that's what's the real difference. So if I'm just going to save that as an example for now. So we'll keep that, compile. Here's a MetaTrader. Okay, so even that, it looks like this strategy probably isn't going to work with if we start pushing the risk to reward, or at least for now it's not, before we add any new filters in. And again, going back to my point earlier, I'm okay if there's no optimization to be done. I'm still super happy with the strategy the way it was before. As long as it performs with the spread filter and deleting pending orders, I'm okay. I'm happy with that. It's or even not deleting pending orders. I'm also happy with that. The main thing is getting the spread filter. That's the bare minimum. As long as that doesn't affect performance, I'm super happy. I'm just trying to see, is there a way to better the strategy? And like I say, I don't know if there is at this point. So risk, let's 0.15 TP multiplier 50. Hold on, what am I doing? Yeah, stop loss is 0.2, spread 10. So this is now the same. So we've got the spread filter. We're deleting the pending orders at the end of each day, but we're not trading June and July. Okay, so we're going to see if that changes the metrics completely. Because again, that's how I have it running at the moment, where this strategy doesn't trade during June and July, and so we need to see if that is kind of a key part to the system. Which again, I'm okay with if that's the case. It would be nice to not have it not trade through June and July, and that will be a goal of mine. But if I can't make it, so like I can't force the strategies to do something that I want to do, and I'm okay with that. So I will take a step back if I'm just wasting time trying to over optimize a system that's already pretty curated for the market that it trades. So this will be the last test that I run on this strategy. Or at least the last test today. I'll probably do some more testing tomorrow morning. I don't know why it's running so slow. I did do the right months fills, didn't I? Reject, June, July, yeah. So what we should see is when we look at the final backtest result, we should see June and July don't have a candle because we wouldn't have taken any trades throughout those months. Again, 2018, 2019, historically, no matter what changes I've made to the system, it's a losing strategy during those years. Where are we? 2018. So we've got from here pretty much 2019. So that's 2018, 2019. So that's kind of what we're dealing with. I mean, those 2 years aren't very nice, especially 2019. Like 2018, potentially you could have capitalized on some inside days to the downside if there was any. But to be honest, doesn't look like there was many. It was just a continuous slide to the downside. And then 2019 is just like, that's a bit of a grind. So what's the range for the whole year? 686 pips. I mean, it's not a lot at all. So maybe it's just those years were pretty bad. But in 2020, that's when this system started to perform really well, which is this year here. So 2020 is like that year. I'm struggling to see any inside days here either. I mean, there's got to be some because it performed well, but like here, inside day. So hit target. There's the next one. It's not inside day. Inside day. There. Oh, there. Not many, is there? Inside day there. Where we at now? 2022. Okay, so this looks more promising. Almost there now. We're in 2024. So remember, this is with this is the original strategy. Okay, so the original strategy didn't have this, so this is deleting pending orders once per day. So technically, it should still be FIFO compliant, and it also has the spread filter in. Okay, all the other settings are the same. So the settings that he's been running on live, haven't been changed. It's just slight additions. So deleting the orders so we're not doubling up, and deleting the adding the spread filter in. Historically, since I've been running this strategy live, it's only doubled up on winners. Okay, so it's again, I've got away with it pretty well. However, if it doubles up on a loser, because the losers outweigh the winners in terms of the dollar value, it's going to sting in the moment. So I'd rather just avoid that proactively. Okay, now we're looking slightly better. So we've got a better win rate and this is again by not trading June and July. We've got a better profit factor, 1.35. Ideally, I want it above 1.4, maybe 1.5. We've stripped out a few trades. So you can see June and July, we don't trade. And maybe it is worth just not trading April as well. But I mean, this is where we get into sort of tricky periods where I don't want to strip back a load of things, right? But April is a losing variable, October and December's pretty much 50-50. So maybe I will do some testing, and maybe I'll only trade this 6 months out of the year. But what I might do is test it back further than a longer period. Like I might do 10-15 years, because there are conditions that will affect this. For example, summer markets generally around June, July, and sometimes in August, liquidity dies down. Not massively, but summer markets is known to be a thing. And the reason that summer markets are a thing is because there's a lot of people going on holiday. There's periods where funds and stuff and banks won't go into shutdown, but they might be running on limited staff, and therefore liquidity will dry up, or volume would dry up. Again, not a major amount, but slightly, so that some strategies may notice it. April, I have no explanation for April. Maybe it's just one of those months. However, December, we can also put it down to, well, volatility usually dies off a week before Christmas and then carries on until like early January. So does it make sense to not trade inside days in December also? Because we have to take into account that an inside day, we're basically trading on the intraday volatility. So when we have the inside day, what we're saying is that the next day here is the prices, and I'm going to use very basic terminology here. Price is compressing, right? Price is contracting within the yesterday's range, within this candle's range. Okay, so what we want to do is we want to see the volatility on the breakout. Well, if you're trading through December, or at least at the end of December, where there's no volatility, or the volatility is very low because there's no market participants, or again limited, well, you're probably not going to get that volatility spike. Okay, so again, I'm going to do one more test, and then the missus is probably going to kill me if I do any more. So let's do one more test. Let's block April and December as well, and let's try that. And I'm sure it's going to give us fantastic results. My worry is it over optimized? Have I overfit it for the data? That is my biggest worry at this point. So I'm going to have to do some serious testing, and try instead of blocking out all these months, I'm going to try and figure out a way to not have to do that. But we'll see. So we'll go settings, keep all those the same. I can't remember what we set it to last time, but let's try and 10. Let's try this. This is, I promise you, this is the last test I'm doing now, and then I do have to go. Because yeah, it's not worth being shouted at by the missus for being late. I've also got to get dressed, because I can't rock up to a parents' evening wearing a tracksuit. I think I'm I mean, like a full body tracksuit. It's not the best look being rocking up to a school dress like that. Who knows? I might just wear this and throw over a Darwinex gilet. You know, representing the schools. Get the kids started on FX Dreamer and Darwinex early. It's a slow tester. This is for some reason. Okay, 2018. I wonder if blocking out April and December, I wonder how that affects 2018 and 2019. Because something else that I try and keep in the back of my mind is if a strategy has a losing, some losing years and some really profitable years, I would be happy to remove some of the gain from the good years and spread it to the bad years, if that makes sense. So I'm happy to reduce profitability on the good years to make it more stable on the worse years, if that makes sense. See you later, Tan. Have a good one. Jamie, yes, it will be available afterwards. You'll be able to watch it on, I don't know whether you're watching it on my personal X or on DarwinX, but it will be available on DarwinX, DarwinX Zero, and my Twitter, and all 3 YouTubes as well. My YouTube, DarwinX YouTube, and DarwinX Zero's YouTube. It's the first time I've streamed it to my personal pages, but I thought I may as well get more people watching the sessions and, get more value out to more people. So I hope it's been a useful session anyway. We'll be wrapping it up in a few minutes. I want to see the outcome of this this new strategy. It says, yes, I am an algo trader, but I build my own algorithms using building block no-code platforms, and then I build portfolios. So I basically run like multi-strat funds. This is my main portfolio, XAQP on Darwinex. It's been live since the end of April this year. 27.4% return with a max drawdown of 4.33%. That's my risk-adjusted return. My actual MetaTrader is far lower. It's about 1% max DD with just under a 5% return, but I get scaled up on Darwinex. So yes, to answer your question, I am an algorithmic trader. However, I have 7 years of experience as a discretionary trader before I made that switch across. Okay, we're in 2022. So we're still seeing that pick up in 2022. So that must be, it must be a specific time of year where we see this volatility. Because this is kind of, if I do put blockers on for specific months, we can treat it more as a seasonal strategy as opposed to an intraday strategy trying to capitalize on volatility. We can look at actually making it into a seasonal strategy, so it is only active at certain points of the year. It's a little bit different to kind of, because you're changing the logic there, right? Where we go, well, we're not just trading every inside bar that happens. We're basically looking for the inside bar when volatility is highest. Okay, because we're looking at different seasonal opportunities. Okay, so when is the volatility highest? Why is it highest at that point? Is it likely to be for that to stay the same way for the next 5 years, 10 years, 15 years? Or has it been seasonal because of, specific events? For example, Brexit. Did Brexit make GU give a load of inside days or outside bars, for example? Like you've got to question everything and not just look at it on the face value. Ricardo, I'm going to answer your question in a really poor way, so I apologize. Ricardo said, what books would you recommend for algo trading? I guess there's some theory I should be aware of so I can later invent my own strategies. The reason my answer is so poor is because I've never read a book for algo trading. I did a lot of my learning by experience, just playing, testing, building, I did a bit of study, but nothing crazy. But I already had like knowledge of different strategies and ideas and stuff. So yeah. Okay. So like I said, it's far exceeded the the previous performance. We got a 0.84% drawdown, just under a 3% return. So that has come down from the original report, which is a shame, but we are trading less. Profit factor 1.54. We're winning more trades. Okay, so our win rate has gone up, but we have blocked out April, June, July, and December. Okay, so it looks like it was still holding a trade from November. October is also another one. We could probably block out October, but then it becomes a seasonal strategy as opposed to an intraday strategy. So I've got some things to think about. Yeah, I've got some things to think about and see how I want to approach that specific strategy. But we'll see. I'm going to continue testing that tomorrow. Hopefully get that strategy review completed by tomorrow. But I can't say for sure. I could just leave it as it is with the spread filter in. That's at minimum what I'm going to do for the foreseeable. SIZ said, is this your channel? It depends what channel you're watching it on. So I run the Darwinex and Darwinex Zero YouTube channels. But if you're watching it on my channel, then yes, it is my YouTube channel. I'm presuming you're watching it on Darwinex, so because that question would make more sense. I'm head of growth or head of UK growth and business development for Darwinex and Darwinex Zero. Hence why I'm just on here doing a stream, looking at markets, looking at strategies, and looking at my Darwin. Ricardo said, so you basically knew some strategies and then coded them, tweaked them, and backtest. That's it. Yes, but it's more like concepts and specific strategies. Like the inside bar strategy I built isn't necessarily a strategy. It was just an idea, and I've tried to build a strategy around the idea. Inside day, for example. So yeah, it's just knowing load of different variables, different data sets. Edgeful is a great place to go to find out data sets. You might be able to get some insights from there and be able to go, well, okay, this has a X percentage chance of happening. Now, can I get that into a strategy to try and trade it? Might not work, might work. You never know. But yeah. Okay, guys, we're gonna call it an end of the session here. I'll answer SIZ's last question. Where did you learn algorithmic trading? Because this is quite a common question. So I think I need to do some more streams around this. I learned from a friend. Well, initially he pointed me in the right direction of the platforms to use and gave me some advice. But then I just started jumping in 2 feet deep, watched a few YouTube videos, nothing good enough for me to recommend. But then I just started testing things myself. I'm a very curious person by nature, and I would like to think that I have an element of what I call like common sense and curiosity. So when you're testing something new, you kind of know what should happen, what shouldn't happen before you've even done it, and then just being curious enough to keep testing new things and trying new things out. So I'm really not a good person to ask where you should learn algo trading if that was something that you're interested in, because I just learned by myself, really. So yeah. Anyway, guys, it's been an absolute pleasure to be on today. We've been on for an hour and a half, which is yeah, a long time. So I'm gonna go and have some dinner, go to parents' evening, and hopefully my little girl's been behaving herself at school. So I hope you have a fantastic rest of your morning, afternoon, or evening, wherever you are in the world, wherever you're watching this from. Thank you guys who are watching this from the Darwinex channels. I really appreciate you. And anybody who's watching it from my personal channel, I really appreciate you too. So I will be back streaming again tomorrow at 4 p.m. UK time. We'll probably do some similar stuff, but I also want to do some Darwin reviews. So if you guys have a Darwinex account and you have a track record, be sure to jump on. I will do a live review for you, going through all of your metrics and different variables so that we can see if there's anything that you can work on to fix your trading. Guys, have a fantastic rest of your day. Peace out, and I'll see you in the next one.